I don't know if the government has to step in because we have a housing crisis, and I don't know if the government has to step in, like in easing the requirements for conventional loans, maybe. Sorry, for FHA loans, maybe. But I see that. Correct me if I'm wrong, but I see that there has been a spike on conventional loans versus FHA loans. I think that.
Like what you're referring to, I'm going to say is like loans. We call them mortgages.
Mhm.
And so like, yes, you can do a conventional loan as an investor, but typically with investors, because their portfolio is the way it is, usually they're not using conventional loans. Now, first time investors will, because it's 15% down if you're buying one unit, and there are
Yeah.
the rates are a bit better, but even lately now the non-QM rates on investment loans have been about the same as your Fannie Mae loan, if you will, right? So what we've been doing a lot of is, so before the 12-month business bank statement loan, we were doing a lot of DSCR, right? The debt service coverage ratio loans. And we were doing a ton of those even during COVID, but what makes those more challenging today is because the rates are a bit higher. So you have the rates a bit higher, than the valuations are higher, but the rents actually haven't caught up to it. So I'll give you a perfect example. We have a loan officer doing a deal in Colorado, and DSCR, it's just, but the rents aren't there. So on DSCR, your rents have to at least cover the housing payment, right? So if your housing payment, your PITA, we'll call it, principal, interest, taxes, insurance, if that's, let's say, $1,500 a month, well, then the rents have to be at least $1,500 a month or greater. Now you can go below that, but then the requirements get a lot more challenging, like more down payment, rates get a bit higher. So the new product that we've been doing a lot of recently is just a 12-month business bank statement. Because most investors, I would say a lot of investors we work with, they're business owners. Or let's say they are working for a company, they have 20, 30 doors, and they're having those rents hit their account. That goes to whatever business they have managing their real estate portfolio, right? So now we can actually take 12-month business bank statements and we calculate the deposits to determine their income. So unlike on a conforming loan, we have to deal with taxes or W-2s or whatever the case may be. This is literally just looking at bank statements. We take the deposits, and then we have a ratio that we use to determine the amount of income from those deposits that we can use. And so it just makes it so much easier for an investor to go out and buy property because they don't even have to worry about the rental.